Solana's chances of an ETF approval just jumped to 83%, and the SEC's new deadline for a decision is July 31st, which of course is right around the corner. But there's a lot more happening with institutions going all in on Solana behind the scenes. Because while the SEC has raised concerns about the filings, there is undeniably a SOL Treasury Vehicle arms race that's unfolding ahead of this potential ETF approval. We see hundreds of millions of dollars of SOL being purchased by publicly traded companies. So here's everything we need to know about the pending ETF approvals, what's really changed, and what it really means for us in terms of seeing a new all-time high this year. GM and welcome back to Solana Floor. We're just coming out of a Solana conference season, which has given us a long list of reasons to be bullish on Solana, from the seeker shipping on August 4th to the immense institutional interest that we're seeing across the ecosystem. So today we simply have to break down why optimism is through the roof with the men in suits. And yes, it has to do with the vast inflows that we're seeing come into the Solana ecosystem. Because on top of the Solana Treasury Vehicle arms race that we're seeing unfold between names like Sol Strategies, DeFiDevCorp, Upexi, Torrent, Classover, and more, the SEC has finally clarified that staking on public POS networks is not a securities transaction. Take that, Gary. But not only did the SEC clarify its position on staking, they've also received filings from REX-Osprey funds for staking-enabled ETFs in the US that would essentially split investments between SOL and ETH and use at least half for on-chain staking yields. Now, this has been work in progress since February, but it's not all smooth sailing yet, because the SEC said not so fast, and they voiced some concerns over these new staking ETFs. They're specifically questioning whether some risks, like potential losses from slashing, are adequately addressed within these ETF frameworks. Now, we already have 2 Solana Futures ETFs live and nearly a dozen more pending, with Polymarket giving an 83% chance to a 2025 approval. So if we combine that with 65% of SOL already earning 5 to 7% APY, and TradFi giants lining up to buy hundreds of millions of dollars of SOL, it is entirely possible that Solana staking ETFs and future Solana spot ETFs would spark another huge price surge. Because we already saw this in June last year after VanEck filed for a Solana ETF, which led to an 11% pump. So, taking all this into consideration, let's break down why this is extremely bullish news despite the SEC's concerns. So the big news here is that on May 29, SEC staff released guidance explicitly stating that staking on public POS networks does not count as a securities transaction. Now that's great news because it means that when you delegate your SOL to a validator and you earn rewards, you are not technically buying or selling a security. This of course removes the biggest regulatory overhang, blocking a staking-enabled SOL ETF in the US. But as we just saw, there are concerns, and we'll see in just a second what Bloomberg analyst James Seyfarth called a bunch of clever legal and regulatory workarounds to get these products to market. Before you panic, I know, it is easy to dismiss this as noise.
Care? Look at me. Do I look like I care? Look, just take it. Do I look like I care? Look at me. Look, no, Sharice, look at me. Do I look like I care? Look. I don't care.
After all, if the SEC is concerned, then nothing is going to get approved, right? But here's what's changed and why you should care. Previously, anyone building an ETF that paid out on-chain staking yields risked running afoul of the outdated Howey-style definitions of securities that we've unfortunately had since the 1930s. Now, funds can potentially structure a product that simply holds SOL, stakes it on-chain, and then distributes the staking rewards. But here's the kicker. This can now happen without the SEC tagging it as an unregistered securities offering. Yep, still looking at you, Gary. All signs point to Solana's readiness for further ETF approvals. Over $7 billion in 24-hour volume with 1.7 million traders. That's far beyond Ethereum's 1.3 billion volume with only 60,000 users in the same period. And as one user points out, Solana is faster, it's cheaper, and it's already used by payments and fintech giants. So, it is ready to follow in BTC's footsteps. Alright, let's unpack this REX-Osprey staking-enabled SOL ETF filing with the ticker symbol SSK, because it could be a real game changer in terms of acting as a further stamp of approval. And it was only back in January that REX shares and Osprey funds proposed a Solana staking ETF. That filing became effective just a couple of days ago, literally within 24 hours of the SEC guidance. So, analysts expect this specific fund to be live either in late July or early August. But how does it work? The staking ETFs will function quite simply by holding SOL and delegating a portion of these holdings to one or more validators. According to the prospectus, the fund will stake at least 50% of its SOL holdings and earn transaction fee rewards in SOL. Then, after deducting custodian and validator fees, all staking rewards will be returned to the fund and distributed to the shareholders. Here's Nicholas Mersch from Purpose Investments explaining how staking ETFs are going to function using SOLL as an example.
SOLL is a passive spot ETF. So for each share, we hold a corresponding amount of SOL tokens in cold storage. So on top of that, we do something extra. So we stake the Solana, as you had mentioned, and those rewards accrue directly to the ETF. So this will boost the fund's return in the form of this increase in NAV compared to just holding SOL on its own. And importantly, investors don't have to do anything or worry about the technical details. So that they don't have to worry about the lockup periods or managing these private keys. It's very seamless.
So when approval? Let's quickly talk about structure and timeline here because things are slightly different this time. Unlike a typical US ETF, which is usually a pass-through entity taxed at the shareholder level, this new filing is a 40 Act C Corp, which can hold SOL directly, stake it, and absorb the tax liabilities at the corporate level. So any tax expense gets reflected in the fund's NAV or net asset value. And it's this unusual structure which is a quote-unquote clever regulatory workaround, as Bloomberg's James Seyfarth puts it. And he thinks approvals could come sooner than we think. Eric Balchunas echoed this sentiment, and he said that issuers are pushing the envelope hard in an effort to get to market first. To get more first-hand information from a team which went as far as pitching the SEC directly, we spoke with FaZe Labs to get a sense of how builders within the Solana ecosystem have come to think of these staking ETPs, and of course when they think approvals could come. Here's co-founder Seb's take.
Yeah, I think, it's a big step in the right direction. I think it's also kind of like, something unique that, Solana and proof of stake blockchains like Ethereum, have is like, you can actually prevent dilution from your assets. Like when you have Bitcoin ETPs and things like that, or ETFs, like, you kind of hold Bitcoin and that's it. There isn't really kind of any yielding ability there. But with staking, like on Solana, now people can have their SOL staked and they can earn, inflationary rewards on that SOL, and they don't get diluted due to the network's production of additional SOL by block rewards and such. So I think it's a step in the right direction. It makes complete sense. Just having an ETP where they just hold SOL doesn't really make total sense in a staking world, because you can now provide increased yield and returns for people that are participating in these funds through staking, and that also helps to decentralize and protect the network. And I think it's going to happen on Solana, sooner than we think. Probably, hopefully it's us first. ETH's probably the bigger whale in the room. They might get the staking ETPs first, but I think Solana is very, very close behind.
We know that REX-Osprey isn't alone because other industry heavyweights have already filed for spot or spot plus staking SOL ETFs. We know that VanEck, Grayscale, 21 Shares, Bitwise, and Franklin Templeton have all submitted S1 or ETF registration statements between March and May. Meanwhile, Canada has perhaps unsurprisingly paved the way once again, because back on April 16th, we saw multiple spot SOL ETFs start trading, with 3iQ, Purpose, Evolve, and CI Galaxy already trading on the TSX, with all the Canadian-listed spot Solana ETFs including staking rewards. And as Eric Balchunas reminds us, Europe already has staking ETFs and much, much more active. Now, another extremely bullish sign that corroborates this idea of Solana's growth being far from done is, of course, the insane stablecoin issuance that we're seeing. Circle alone minted a total of $1.75 billion of USDC on Solana in May. We're also seeing vast amounts of capital being bridged to Solana, like this report that shows $650 million bridged to Solana, again, alone in the month of May. Now, what's quite striking here is that over $400 million of that was bridged from Ethereum. There is, of course, more news because just last Friday we saw that DeFiDevCorp joined CBOE and Nasdaq by listing standardized options on its stock. This dual listing gives both institutional and retail investors new tools to hedge, trade, or express directional views on DFDV shares. But the real magic sauce for DFDV is that they can now unlock even more liquidity to keep acquiring SOL to infinity, as they refer to it. And they're going to add to the 620,000 SOL that they already have, which is worth about $100 million at today's prices. Here's Head of Investor Relations Dan Kang explaining why DeFiDevCorp believes Solana could flip Ethereum sooner than we think.
Punchline is we think Solana has a really good chance to flip Ethereum this cycle. It just offers the most compelling combination of performance, price upside, yield, real on-chain usage. It's faster and cheaper than ETH. It powers a wide range of sectors, from DePIN to meme coins, as we previously mentioned. And then obviously has the native yield component, which is really important.
In short, in a wild 180 swing, the US regulators have cleared PoS staking as non-securities. REX-Osprey staking ETF could launch within weeks, with the final decision deadlines in October. Multiple TradFi giants are lined up to keep acquiring Sol. DFDV's options listing and LST partnerships with Camino further cements institutional interest. And of course, Solana's on-chain staking fundamentals remain as strong as ever. On a final note, we have some bullish news coming from the UAE because Dubai's VARA, or Virtual Assets Regulatory Authority, just signed an MOU with the Solana Foundation. We already know that VARA is the world's first independent regulatory body for digital assets, or virtual assets as they're called in the UAE. So it is fitting to see this deal, which will let Solana founders plug directly into the massive momentum in Dubai. Here's a friendly reminder that none of the content in this video is legal advice, financial advice, or any kind of advice. It is meant solely for informational and educational purposes. Always do your own research. And if you'd like more updates from across the Solana ecosystem, you can, of course, subscribe to Solana Floor and let us know in the comments. Will a string of Sol ETF approvals help to take Sol back to all-time highs this year?